Hello, everybody. My name is Ronald Kashrekam. I'm an accountant by profession, and I'm currently working as an account supervisor. All right. So, what do? I conduct online lessons for management accounting, financial reporting, cost accounting, and I also do pastel lessons and also QuickBooks uh, lessons. Okay, I know you'll probably be writing exams soon, so I thought of just making a video to share with you guys. And also, I'd like to appreciate everybody who has already subscribed to my YouTube channel. If you are new, kindly subscribe to this channel. Kindly hit the subscribe button so that you can be able to get notifications whenever I post a new video, especially if you're an accountant or any finance person, then that will be very important. And also, don't forget to leave your comments and your likes. And also, I'll drop a number in case you want to join my classes for the subjects that I just mentioned. You can just contact me or you can send me a message on WhatsApp. I'll also drop a number so that you can easily do that. All right. So today I thought of I was thinking of Goodwill. Okay, I was basically thinking of financial reporting. I was like, okay, let's talk Goodwill. All right, I always say something every single time. As an accountant, we need to understand the theory, the practice, and also we have to love accounting. There's one thing that I do personally. I'm someone who loves accounting, and apart from loving accounting, I love to teach. That's the reason why I do teaching. I don't do teaching for the money, but I do teaching because I love it. Okay, that's the reason why I decided to come up with this YouTube platform that I'm actually asking you to support by subscribing. All right, let's begin. You know how in financial accounting they were telling you about assets? You remember your financial elements, your assets, your drawings, your liabilities, your revenues, your incomes, your equity. Yeah, there's one particular asset there's one particular financial element that they talked about, which is the assets. The assets were categorized into two. Okay, they spoke about non-current assets and current assets, which are basically differentiated by the period. The current assets is within a year, and the non-current assets is over a year. Okay, so when we go to the non-current assets, we can even break it down some more. We can say tangible non-current assets and intangible non-current assets. Tangible non-current assets are uh, physical non-current assets that you can touch. Like for instance, we talk about things like machinery, equipment, computer equipment rather, land, fixtures and fittings. Those are all tangible non-current assets. But imagine this. Guess what? We also have some other assets. These are assets, we call them intangible non-current assets. We call them intangible non-current assets. So, goodwill is basically an example of an intangible non-current asset. An intangible non-current asset is an asset, a non-current asset rather, which will probably last for more than a year, but you can't really touch it. It's not physical. Okay, an example of that is goodwill. All right, so what is goodwill? Goodwill is an intangible asset that arises when a company acquires another business for a price higher than the fair value of its identifiable net assets. Okay, so there are terms that I need to break down here. Firstly, intangible non-current asset, I will explain. Okay, goodwill itself, and then also net assets. And uh, the purchase price. Also know that goodwill only arises when one company buys another company. There's no internal goodwill. Goodwill will only come about if one company or a portion of a certain company or the entire company is actually purchased by another company. Okay, so you only find goodwill in business combinations in financial reporting. Okay, internally there's no goodwill. When you buy, there is goodwill. All right, so there are certain terms here. There's goodwill, which I've said is an intangible asset that arises when a company acquires another business for a price higher than the fair value of its identifiable net assets. Okay, what do I mean by fair value? A fair value is a market value, more like the market price or the price determined by market trends. Okay, that's fair value. or the market price. So the difference between net assets and purchase price is what we can actually say is goodwill. I'll give you an example. Purchase price, we know what it is. Let's say we bring in an example. Let's say company A. Let's say we have the company. Okay, we have two companies. We have company A, and we have company B. Okay, we have company A and we have company B. Okay, so company A actually acquires company B. Okay, company A acquires company B. Okay, or basically company A purchases company B. What's the purchase price? The purchase price, let's say the purchase price is 1,000,000 kwacha. Okay, so company A acquires company B for 1,000,000 kwacha. All right, the net assets, or rather the total assets for that company as per their balance sheet is 800. Yeah, the total assets for that particular company is 800, and then we have total liabilities, and then the total liabilities is 200. Okay, so here I just want you to understand those terms. We have the purchase price of 1,000,000 kwacha, and we have the total assets. Let me change this to total assets. We have the total assets of 800,000 kwacha and total liabilities of 200,000 kwacha. All right. So how can we find the goodwill? Okay. So firstly, I want to explain what I mean by net assets. Net assets is the total value of a company's assets after we have removed its liabilities. So in this scenario, our net asset will be, anyone? Yeah, that's correct. Our net assets will be 800,000 kwacha minus 200,000. Yeah, something like this. Okay, so our net assets will be 800,000 kwacha minus 200,000 kwacha, giving us 600 kwacha. Okay, so basically, how can we define the net assets? The net assets is the difference between the total assets of a business as per their balance sheet and the liabilities. So the difference is what we call the net assets. Okay, now let's go to goodwill. Company A has bought company B. Okay, and this is basically coming from the balance sheet of company B. The total assets and total liabilities are coming from the balance sheet of company B, which has been bought or purchased by company A at 1,000,000 kwacha. Okay, so the difference between the 1,000,000, which is the purchase price, and the net assets, which is the 600,000, is what we refer to as the goodwill. So goodwill is basically the difference between the purchase price and the net assets of a business. Let's say, for instance, our net assets is 600,000 kwacha, and our purchase price was at 1,000,000. Not really, not 1,000,000. Our purchase price was at 600,000 kwacha. Let me repeat this. Imagine our net assets is at 600,000 kwacha, and our purchase price is reduced or dropped to 600,000 kwacha. What does this mean? Our goodwill. Do we have goodwill there? No, we do not, because that will be what we actually call a bargain purchase, which is zero goodwill. Okay, it's a bargain purchase, zero goodwill. All right, so basically that's what goodwill is. Let me just explain the definition again. What is goodwill? So goodwill is the difference between the purchase price or the higher of the purchase price and the net assets, or the difference between the purchase price and the net assets. When the purchase price is actually higher than the fair value of the net assets. Okay, that's what goodwill is. So there are certain points that we are supposed to understand. Make sure we are actually familiar with when we are talking about the concepts of goodwill. Okay. Number one, goodwill is an intangible asset, like I mentioned. Goodwill is not a physical asset like machinery or business or buildings, but represents value from business reputation and also customer relationships and market positions. And also, goodwill is only company buys another. It is not internally generated. Okay, and then the other point is goodwill is subject to impairment. Unlike tangible assets, goodwill cannot be amortized. By amortized, I mean gradually written off. Instead, companies must test it annually for impairment. What do I mean by impairment? I'm talking about impairment loss, a reduction in value of if the acquired business underperforms. How does goodwill impact on financial statements? Okay, so by financial statements, firstly, I will mainly refer to two financial statements. That's the balance sheet and the income statement. So in the balance sheet, which is the statement of financial position, goodwill is recorded under the non-current assets tab. It might reduce if there's an impairment loss, but if there's no impairment loss, then it will be recorded just the way it is. So goodwill is recorded under the non-current assets. And in the income statement, if goodwill is impaired, goodwill will be expensed during the net income. Okay, in the income statement, if goodwill is impaired or there's an impairment loss, then goodwill will be expensed, reducing the net income. What is expensed is not really actually goodwill, but it is the impairment loss on goodwill. It will become an expense in the income statement, or it will be debited in the income statement, thus reducing the value of our net profit, or our net income rather. So I have a number of questions for you. Okay, I don't know if you're writing them down or not. Hopefully you're writing them down. And what I want you to do is drop the answers in the comment section. Okay, drop the answers in the comment section. I'll check through. Okay, I will check through. Drop the answers in the comment section. So from this lesson, number one, what is goodwill in financial reporting? That's my first question. Number two, how is goodwill calculated? Number three, why is goodwill not amortized like any other intangible assets? Number four, where is goodwill recorded in the financial statements? Number five, what happens if goodwill is impaired? Okay, so kindly answer those questions in the comment section, and don't forget to subscribe to the channel for more such contents. And like I mentioned when I was starting in this video, in case you want to learn more, or you want us to actually solve questions where we literally solve past paper questions, to try and prepare ourselves for our exam. Like for instance, the way the March exam is coming, you can join my classes, and then we'll be solving questions gradually to ensure that you are actually familiar with the papers. Like I always encourage, like I always tell you guys, keep on studying, keep on practicing, understand the material, understand the theory, and your future goals will be ascertained. They will be confirmed, and you'll be whatever you want to be. Okay? Thank you very much. This is the close of my session. Thank you.